Good afternoon, this is Bob Iaccino coming to you from the CME Group trading floor in Chicago. Talking energy, specifically crude oil. The crude oil futures contract was down over 1% today, over 1.25% on the lows. Finished off the day just over 1% to the downside, reaching a low of 62.72, finishing the day just barely above that $63 mark. Now, this is the first down day in the last 4. Crude oil has actually only been down 3 of the last 11 days. It's been in a fairly decent recovery since we saw that push down to that 58 level a couple of weeks back. So that recovery was interrupted today by a couple of things, mainly the Powell testimony. Fed Chair Jay Powell had his first testimony before Congress. That particular testimony went hawkish by most accounts. Now, the strength in the dollar that was caused by mostly the Q&A session, the pre-release text didn't really cause much dollar movement at all. The dollar was slightly higher, but virtually unchanged. Same thing on yields. Yields are what's pushing the dollar higher. As the yields rise, that implies fewer dollars in circulation and pushes the dollar higher. But when he got to the Q&A, specifically talking about the number of rate hikes that could happen, he seemed to imply that it might be a little easier to go to 4 rate hikes than it would be to go from 3 to 2. Right now, everybody in the Fed is predicting 3, but he is asking all the Fed voting members and governors to put out a new estimate, a new dot plot, as they call it. Now, the strengthening in the dollar pushed crude oil lower, as it did for all commodities. Copper went down, all the main ones anyway, silver, copper, gold, crude oil, natural gas. Only a couple of sort of outlier base metals rallied a little bit and then ended up lower on the day anyway, but just barely lower, closer to unchanged. But that dollar strength definitely put pressure on commodities. It also put pressure on the equity markets, but those recovered in toward the end of the day as well. Now, in terms of the bullish case for crude oil, which may resume, it's my feeling it'll resume. We have Iraq announcing today that their production increase that most predicted would happen in 2018 is being pushed back to 2019. They're going to be increasing production by 1 million barrels a day, but because of the agreed upon OPEC production cuts, that's being pushed back to 2019. It's a whole new field. It's their first sort of new tender in crude oil. It got in double-digit years. So most of the production they've had has been the increase of the existing fields. This is new tender for Iraq, and it's going to add about 1 million barrels a day, pushing them from a little over 4 million to 5 million barrels a day and beyond if they get the production out of there that they expect. But that has been pushed back. So it's not really going to come into play in terms of 2018 prices. We could see it, however, come into play in 2 ways. Down the curve, sort of interrupting that sort of contango backwardation relationship that we've seen, and also the idea that Iraq might not necessarily be on board for production cuts because they're going to want to get this online with higher crude prices that we have now, as opposed to lower crude prices that U.S. shale might push somewhere down the road. This is Bob Iaccino talking about a lower crude oil futures contract from the CME Group trading floor in Chicago.